Good morning. Welcome to this Phoenix Blue morning update on Monday the 13th of June. I'm Tom Colley and I'll be talking you through the markets and the news this morning. So let's go over to the news, and this week's going to be totally dominated by Wednesday evening, the FOMC statement, the federal funds rate announcement, and probably more specifically the FOMC press conference where Janet Yellen, the chairman of the Fed, will be going through the statement and the reasons for the decisions that have been made, and then open to questions. What we'll really be looking for here is the market is assuming there will not be a rate rise at this meeting. It will be looking ahead for indications of what may happen at the July meeting for a potential rate rise at that point. Last week, Yellen spoke, and she was more hawkish, more in favour of rate rises despite some very poor non-farm payroll data. So it's going to be very, very closely watched. We will have a lack of liquidity in the markets prior to this event, a lot of volatility around the event. And then virtually immediately after, in the early hours of the following morning, we have the Bank of Japan policy statement and press conference. And then first thing around the the European Open, the SNB, the Swiss National Bank, will equally be having their rate announcement and press conference. And then later on that day at midday, we've got the Bank of England doing the same. So in that very tight period, a real concentration of central bank announcements. The key one is undoubtedly going to be the Fed. I'm thinking in terms of staying away from the market till at least after the 8:30 announcement from the Swiss National Bank. The Bank of England, less of a concern to me at this moment in time, because we are not, Phoenix Blue currently this week will not be trading any pound pairs, be it the pound US dollar or the pound crosses, simply because of the volatility for the upcoming Brexit vote. Last week we saw some huge moves in the market, some of them extremely quick, one of them only within a matter of minutes, whipsawing, purely on opinion polls, which just shows how uncertain that market is. So we'll be staying away from that market now until we actually get a positive decision one way or the other, and then we'll be looking to trade the reaction from that. Okay, what we've had on news today, overnight or yesterday was bank holiday in Australia, so the Aussie dollar is going to be even less liquid than it would have been had it been open prior to the Fed announcement on Wednesday. Then we also had industrial production from China, came in roughly on the forecast, so nothing dramatic coming out of that. Over in the Far East, we have had a significant move on the Nikkei here, the Japanese equity exchange. We've had a clear break below this significant level here, a break below the triangle that we've been waiting for. That has been reflected as a risk-off move. If we go over to the US dollar yen pair, we can see the yen strengthening as money comes out of the equities market into the yen in its status as safe haven. Now, a key level down here at 105.50. Are we going to see Bank of Japan intervention? Officially, the answer to that is no, because officially they're not intervening. Unofficially, we believe that they will intervene, if not at this level, certainly at some level below that. Today I'll be looking at that 105 level, looking for an intraday reaction to it, looking to trade on a short-term basis. Everything we're going to be looking at on FX will be short-term this week, looking to get in and out of the market before the Fed decision, or at least get money off the table and a stop at break-even into the Fed decision, so we've got no risk and no potential loss there. Over on the dollar index, well, through the back end of last week, Thursday and Friday, we saw a return to dollar strength. We'll be looking at this morning and through the next couple of days. If that dollar strength returns and the push continues up to the $95 level on the dollar index, we'll be looking at dollar strength trades again intraday, as I've just mentioned. On Friday, an interesting mood on crude WTI. We have been trading above $50 in this market. We had a rising wedge, a significant break below that rising wedge. You can see an order already in place here around the 49.70 level, looking for a retest of the wedge. Significant level here about 48.40, also a break of that, and we'll be looking for a retest to the short side in this market, looking for targets, T2 targets around $44. Over on the S&P, well, we had a big sell-off on Friday. Key level here at around 2085. Again, we'll be looking to trade this market long from that level. The trade may not produce a great deal before the Fed. We'd like to be in that long ahead of the Fed decision, and our stop at break even, with a view to the market, or the decision actually moving the markets back up to the all-time highs up here at about 2130. Or if the result of the Fed meeting is the opposite, we'll have a break below this level, an opportunity to re-enter on the retest of that level, and then we'll be looking to the downside. First targets at around 240, where there's another significant level, and T2 targets down to this level here. So we're not expecting this market to break this level prior to the Fed. If we can be in the trade long with no risk on the table, that would be a great scenario if price was to go that way. If price breaks the other way, obviously we'll have lost nothing, and we'll still have the opportunity to get in there short. So that's really the outlook for today. As I say, lack of liquidity, caution, lower levels of risk. Intraday trading going to get in and out of the market, or at least get money off the table and stops at break even, so there's no risk left on the table, because we do expect a higher degree of volatility due to the lack of liquidity. Now, if you like what you're hearing, quick mention about free workshop this Wednesday in London between 1 and 5 p.m. If you'd like to come along and learn a bit more about how we analyse the markets, please visit the website. It may not be too late to, if you do that today, to get an invitation for that event. But if not, you can also register for the forthcoming or the next event, which will be the following month, or even arrange to come in and have a private consultation with one of our traders, with a view to doing exactly the same thing and finding out how we trade. This is how we trade on this style of analysis. We have more than one style. This is the pure analysis. We have clean charts, horizontal levels. We don't use lagging indicators. We use fundamental bias, commitment of traders and analysis, seasonal analysis, and that allows us to trade with a very small stop loss. Means you can improve your results from the same number of winners, so you don't need to win as many trades in order to make money. Okay, any questions whatsoever, we can be contacted at info@phoenixblue.co.uk. Anything at all, just email us. More information on the website at phoenixblue.co.uk. Any specific questions for me, I'm tom@phoenixblue.co.uk. Email me there, and hopefully I'll have an answer. Okay guys, so the start of an interesting week, all about the Fed on Wednesday night. Let's trade cautiously, but let's hope successfully. And I look forward to speaking to you later in the week. Take care. Bye now.